The Nasdaq 100 this week has remained volatile on signs inflationary pressures in the US remain. Monday saw stocks rise, holding the 20-day moving average, with reports that Meta was planning another round of job cuts. That helped push technology stocks higher. The reason this is beneficial for stock price is that one of the largest costs for tech companies will be labor. If they cut jobs, the company's cost of labor goes down and therefore improves overall profitability, assuming revenue remains unchanged. This is why you tend to see the stock price of a company go up when that company announces job cuts, especially in the services sector like tech and finance. Tuesday was the headline event of the week. With the latest US inflation numbers, inflation did edge lower in January, but came in above analyst estimates at 6.4% when the market was looking for 6.2% year-on-year growth. The Nasdaq 100 did remain resilient, however, and recovered after price initially fell sharply on the report as shown in this chart. Wednesday saw price rebound. Because the Nasdaq 100 didn't collapse on the inflation report miss, that gave encouragement to bulls, and with the better than expected retail sales number, that pushed the Nasdaq 100 higher. Price ran into resistance at 12,750, which has been an area of selling, and price has struggled to close above it. Then came another inflation-related report, US producer prices. Again, another miss in expectations, with producer prices rising by 0.7% when 0.4% was expected. This time the market did not recover, and the selling continued into the close. Now what triggered it? Rising treasury yields. The 10-year yield in this chart hit a 3-month high, and that spooked the stock market, with the Nasdaq 100 coming off. Today's options expiry, which is where listed options for the month expire. It's normally the third Friday of every month. What's interesting in this chart, it's showing the cost to protect downside risk in the S&P 500 is increasing. The cost of hedging a 10% downside move in the SPX is the highest since August, suggesting option traders are expecting a move lower as it becomes more costly to hedge against downside risk. With the miss in both inflation and producer prices and treasury yields rising, are we about to see a momentum shift? If we take a look at the daily chart on the Nasdaq 100, in terms of levels to watch, 12,900 to 940 remains as major upside resistance. Immediate upside resistance is 12,750, which is where price has been stuck since the start of the month and pulled back. On the downside, support levels are the 20-day, which is around 12,290, followed by 12,250. If we get below that, price is likely to pull back to 11,985, which is where the breakout occurred at the beginning of the month. It is likely we back test this area as mentioned in my previous video, and as long as we hold that area, that would confirm a successful breakout. So keep an eye on that crucial backtest area. Next week we have Fed minutes on Wednesday and a first look at US Q4 GDP on Thursday. With that said, thanks for watching. Remember to hit that subscribe button so you don't miss out on future content, and I'll see you at the next one.